All right. You're welcome once again to another episode in our boot camp. And in today's version, or we're going to be talking about risk and benefits of trading forex. All right. Um, there's a popular saying that to every advantage there is a corresponding disadvantage. All right. Anything, no matter how good it is, there is a corresponding disadvantage. Okay. In fact, let me give you a very funny and typical example. In as much as our immune system, okay, I hope everyone understand what an immune system means. That's the system that fights against infection in our body. Okay, so in as much as this system fights against infection and protects our body from invaders like viruses and bacteria, and all these things, okay, this immune system can also cause harm to the body. Okay, there's a disease called autoimmune diseases. Okay, this the autoimmune diseases is when the immune system begins to fight the body. Okay, so you can see that even though this system is beneficial to the body naturally, a little fluctuation or a little misunderstanding in the system can cause harm to the body. In fact, even lead to death in some cases. All right. So what I'm just trying to say is that for everything that has advantage, there is also a disadvantage, and in forex market, it also applies. Okay. So there is a disadvantage. There is the disadvantage part of forex, which happens to be the risk side of trading forex. Okay. Number one risk we're going to be looking at is the volatility. Okay, volatility actually is a double-edged sword. Okay, volatility can also ensure your profitability, but at the same time, if you are not careful, it can incur losses. Okay, you can lose your money due to volatility. All right, so what is volatility for the forex and how does it affect the forex market? From here we have that the forex market can be highly volatile, leading to a rapid price change. All right, this volatility can increase the risk of sudden, in fact, underline that word, sudden loss. Okay, when volatility comes into the market, you will experience a very fast move of price, okay, which can actually incur sudden losses. Okay, and with time, I'm going to show you a video of how this volatility plays out in the forex market from the chart. All right, so secondly, we're going to be looking at leverage. All right, leverage, let me explain the concept of leverage before we go into leverage proper. Now, leverage means the amount of money that the forex, or the volume of money that your broker is more like the a third party that links you to the forex market. Okay, your broker is, okay, for example, let's just say your local bank here. For example, in Nigeria we have Access Bank. We have our local banks like Access Bank, UBA, Zenith Bank, GTB Bank, and the rest. So these banks, they are synonymous to your broker. Okay, when it comes to the forex market, they are your broker and they link you to the forex market. Okay, they are more like the middleman that links you to the forex market. Now, but the money that you are trying to use to trade in the forex market, realistically speaking, is not enough. Okay, I told you before that forex market is a market that a high volume of funds are being flooded into it in a daily basis. Up to like more than $6 trillion is being flooded into it per day. So in a market where $6 trillion $6 trillion is being flooded into per day, decisions that will be made there based on financial power are on a very high scale. Okay, that is high scale in terms of funding power, in terms of financial power. Okay, that's the major stakeholders in forex. When they are investing money, they are investing a very large chunk of money. We are talking about billions of dollars here. Okay, so you can't carry your $10 to go and trade in the forex market and I expect that it will move or do move the market in any way. You get, so that is where your broker now comes in. Okay, and they help you in terms of leverage. They give you more volume. Okay, they give you more volume to trade with. Not like, practically speaking, not like they give you the money per se, but when you open a trade, virtually speaking, they what they actually impute to the forex market is different from the actual money that you are actually investing. Okay, so for example, for every $1 you give, your broker can give, let's say, like $100. Okay, so you personally, you are seeing $1, but what is actually appearing in the forex market itself is around $101. Okay, so that's just what leverage kind of, I think that gives a better understanding of what leverage means. Okay, so now how does this leverage and secondly, this leverage differs. Okay, there are different sets, there are different categories of leverage. And it actually appears in ratios. It comes in ratios. You know, I told you for every $1 your broker gives you $100. So that we actually term that 1:100. Okay, there's 1:100, there's 1:500, there's 1:1000, there's 1:2000, there's 1:3000, and so on. Okay, so now the more the leverage, the more your account stands to the more risk your account is exposed to. Okay, that is how it applies. So that is actually one of the risk of forex trading, or the disadvantage. And right here we have that forex trading often involves the use of leverage, which allows traders to control large positions with a relative small amount. Remember I said 1:100. Okay, so with your relative small amount of $1, you can control the market, like control large portion. Okay, with just that $1. Now, while leverage can amplify profits, it can also lead to significant losses if a trade goes against you. All right, so even though this thing can actually, though I talked about the losing part of it. Okay, but I told you it's a double-edged sword. Okay, it's a double-edged sword. So leverage, once it goes in your favor, it gives you more and more profit. Okay, and then once it goes against you, it exposes your account the more. So we're going to be talking about the next one, and which is market risk. Okay, forex market is subject to various market risks, including geopolitical events, economic data release, and changes in interest rates. Okay, you agree with me that I said before that forex is can act. There are actually two parts of forex: the fundamental and the technical part. The fundamental part is what um, talks about, or is a factor that influence the forex market from the economic part. Okay, you know, we trade foreign currencies, and those currencies belong to different nations in the world. Okay, just like the pound. Okay, the pound is actually it actually belongs to a particular country. Okay, or a particular region, or a particular geographical area. Okay, so now we have the naira, we have the dollar, we have the yen, the Japanese yen, and the rest. Okay, just like the yen is used by the Japans. Okay, we have the US dollar, which is used by the United States. Okay, so the factors, the economic factors that affect these countries, okay, the economic factors that affect these countries can actually influence the forex market. Okay, so your decisions have to be made based on this forex market. Imagine you go and invest in the US dollar, and then something happens that let's just say the US oil crashes. Okay, the price of US oil crashes. It will definitely affect the US dollar, and then your money that is being invested there would also get affected. Okay, so that's one of the risks. And then fourthly, we're going to be looking at the counterparty risk. Okay, there is risk of loss due to the failure of broker or other counterparty party. Okay, just as I told you, the broker serves as a middleman between you and the forex market itself. So that is why it's good to find a genuine broker. It's good to find a genuine broker, a credible broker, okay, a trustworthy broker, a transparent broker, so that you won't get scammed, okay, because it's actually deals with a third, it's more like a middleman. All right, so we'll be looking at the next part, and then the next risk is that a liquid risk, okay, liquidity risk. I mean, okay, since I told you that the forex market is the most liquid market in the world, now this means that some currency pairs may have low liquidity, which can make it hard to execute trade at desired prices. Okay, so now liquidity more like means like price movement. Okay, price movement, the flexibility of price movement. All right, so there are some currency pairs that are not actually they are not actually active. They are slower in their movement. Okay, so but definitely we are going to work on that. I'll guide you through that. They are actually good pairs that you can trade and just get rid of this risk. Okay, then next we have over trading. Over trading or trading too frequent can lead to losses due to commission, spread, and other transactional losses. Okay, and other transactional costs. Okay, now over trading actually has to do with your personality. Okay, when it's just like saying overeating is not good for your body. Okay, that you won't blame the food, or you won't blame the chef that cooked the food. Overeating now depends on you. You are the one to decide whether you want to overeat or not. Now, in forex trading, it also applies to forex trading. Now, whether you can't blame the forex market for over trading, you can't blame anything for over trading, but you can blame yourself. Okay, there's nobody you can blame except from yourself, because you are the one that over trades, and this is mostly due to greed, most times it's actually due to greed. Okay, the greed and the nature of humans. Okay, now we'll be moving to the next, which is regulatory risk. Now forex trading is subjective to regulations by various government agencies, and changes in regulations can affect the market. Okay, now you agree with me that government changes. Okay, government changes. Last 7 years, the president of the US is not the same person currently. Okay, and next 7 years it will still not be the same person, and the changing or the changes that happens in government also affect policies that are being made, and these policies now affect the forex market. Okay, so that the forex market is subjected to these changes poses it as a risk. Okay, as a risk in trading the forex market. Now we have seen the risk of forex trading. We're going to be looking at the benefits of forex trading. Now, number one benefits of forex trading is high liquidity. Okay, even though high liquidity can pose a risk to forex, it can also be profitable. It's also a very, very huge advantage. Okay, in the sense that you can make massive ton of money in just a moment of time. Okay, what takes people months to make, what takes people years to make, you can actually make it in in a couple of moments. Okay, in a couple of moments you can make it. And I'm telling you real, I'm not trying to maybe tease you, or trying to blow the trumpet, or I'm actually telling you the reality of things. Okay, you can actually make, in fact, let me read it. The forex market is the largest and the most liquid financial market in the world, making it easy to enter and exit position. Okay, so because of the nature of high liquidity in the forex market, you can easily enter and exit with your profits. Okay, so that being said, we move to the accessibility. The forex market is accessible to individual traders 24 hours a day, 5 days a week, allowing traders to trade at their convenience. Okay, with your phone and a good data and your gadgets, you can actually access the forex market 24 hours a day during the working days. Okay, except from weekends. Okay, now we move to the global market. Okay, forex trading allows traders to trade currencies from around the world, providing opportunities to profit from changes in exchange rates. Okay, that's basically how traders make their money, from exchange rates and trading global markets, trading different currencies globally. Okay, then we're going to be looking at leverage. Okay, leverage is another part of the forex market that actually enables profits. I told you about leverage, the 1:100, the one ratio concept. Okay, so the more the leverage, the more the profits. Okay, why here we have why leverage can be risky. Even though it can be actually risky, it also allows traders to control. I'm sorry about that. It also allows traders to control large portion with a small amount of capital. Okay, potentially increasing profits. All right, I think I've explained that in our previous slide. Okay, so lastly, we are going to be this is actually going to be our last slide. Okay, and another advantage is that of diversification. Now, forex trading can be used as a way to diversify and invest portfolios, as it is not directly correlated with other asset classes. Now, what this means is that, I told you at first that we have the crypto market, we have the forex market, we have the volatility in the indices, or the synthetic indices market, we have the futures, we have the stock market and the rest. Okay, what this means is that forex is not dependent on these markets. Okay, forex itself is an individual market, so you can trade forex individually and also trade all these other assets individually, so you can diversify your investment. So this is one advantage of forex, actually. More like saying you should not put all your eggs in one basket. Now, the next point, we'll talk about the ability to hedge. Okay, the forex market allows traders to hedge against currency risk, protecting against potential losses due to change in exchange rate. Now, you agree with me? For example, right here in Nigeria, we're having a challenge in exchange rate. You wake up this morning, the naira is around this price. The next day, it has risen. So, one advantage of forex market is that it enables you to hedge your money. Okay, you can buy a particular currency that is stable. For example, the US dollar. You can buy the US dollar and hedge your money there. Okay, your money gets stable, whether the naira is going high and high and high, or coming low and low and low. It doesn't affect your investment. Okay, provided it doesn't affect the dollar, your money is still safe against inflation. All right, so lastly, we are going to be talking about technological advancements. Okay, advances in technology have made it easy for individual traders to access the forex market, with online trading platform and mobile apps providing real-time market data and analysis. Okay, so this actually means that technology has actually eased the process of trading forex. Before, you have to go to the bank, sign documents, fill forms in order to just like execute what we are doing today. But now, just with your phone and network, a good network, with the right apps and platforms, you can get to trade the forex market, execute your trades, and make your profits. Okay, so these are just a number of the risk and benefits of forex trading, the major ones that you happen to encounter. All right, so this being said, we will be going on to the next video. Thank you, cheers, and catch you all later.